Good morning, everyone. Thank you so much for joining. My name is Oyindamola Ibrahim, and I'm so delighted to be your host for today's webinar, One Step Ahead, Avoiding the AML Pitfalls That Made Headlines in Africa. We are so thrilled to have key industry leaders and experts with us to share valuable insight on how we can stay proactive, strengthen compliance frameworks, and prevent the kind of lapses that have made recent headlines across the continent. So thank you again for joining us for what promises to be an insightful keynote and an engaging panel discussion. So together, let's stay one step ahead. So here's a quick look at what we have lined up for today. We've just had the welcome address. So next we'll move into the communication modalities, where I'll walk you through how today's session will run. After that, I'll be introducing our keynote speaker, Mr. Lanre Adeshamo, who will be delivering the main address. I'm very confident that you'll find his insights both timely and thought-provoking, especially at this point in compliance. And once the keynote wraps up, I'll bring on our moderator for the panel session, Tosin Zoya. Tosin will introduce our fantastic panelists and the discussion from there. Following the panel, we'll open things up for the Q&A session. So please keep your questions noted down for that part of the program. We'll also be sharing a special gift from the team at Probe, just a small token of appreciation for spending your time with us today. And finally, we'll close with some final remarks to tie everything together and highlight the next steps. So that's the flow for today's session. Let's dive right in. So here's how we'll be communicating during the session. Panelists will have full access to cameras and microphones throughout the session. Attendees, on the other hand, will not have camera or microphone access. We encourage attendees to share your questions and comments in the Q&A space at the top of your screen or in the chat box. All questions submitted will be addressed during the Q&A segment at the end of the panel. Attendees can also engage using emojis or the chat section for quick interactions. And finally, a recording of this session will be available on our YouTube channel with selected snippets shared across our social media platforms. And one more thing, please note that the chat box is strictly for questions related to today's topic. Please not post links or promotional content because anything outside of the scope of the discussion will be removed. Be sure to follow us at Probe Compliance on Twitter, LinkedIn, Instagram, and Facebook, so you stay connected with us. By following, you'll be notified when the recording of today's session is posted, along with future events that we might be holding, updates from us, and other insights from Probe. So join the conversation, engage with our content, and don't miss any of our upcoming programs. Next on the agenda is the keynote speaker introduction. So please join me as I give a warm welcome to our distinguished and indefatigable keynote speaker, Mr. Lanre Adeshamo. Mr. Lanre Adeshamo is an accomplished chartered accountant with over 2 decades of experience spanning accounting, banking, and financial crime. His professional journey is marked by a strong foundation in accounting, internal audit and control, complemented by deep expertise in legal and regulatory frameworks. Renowned for his diligence and consistent track record of excellence, Mr. Lanre has built a reputation for delivering outstanding results and driving operational efficiency. His proactive approach has led to significant cost savings for various organizations, while his ability to engage effectively across all levels of an organization has been instrumental in achieving strategic goals. So Larry brings a powerful blend of interpersonal, analytical, and organizational skills, thriving in high-pressure environments where leadership and precision are paramount. As a seasoned manager, he excels at mentoring and motivating teams, unlocking their full potential to deliver exceptional performance. Please join me to give a warm virtual welcome to Mr. Larry Adeshama. Go ahead and drop the reaction emoji so we can show some love and excitement, yeah? Mr. Larry, over to you.
I didn't realize that my microphone is still muted. Good morning, everyone. I'm glad to be here, and I believe we are going to have a wonderful session this morning. So we are going to be discussing one important topic, one step ahead, avoiding the MA pitfall that made headlines in African webinars. So the topic we are discussing today is cross-continental, whether you are in America, whether you are in Africa, whether you are in Asia, whether you are in Pacific. But so to really bring it down home, what we will be discussing has to do with what is happening in Africa. So we are missing at a time when regulators and enforcement bodies across the continent are sending a clear message, and the clear message is that we need to up our game, and we should do what we need to do by aligning our business with regulation. So because if that is not happening, we are just making money with the right hand, we are going to be on the other side, use it to pay penalty, then do a lot of remediation in getting our system and process to be in tune with whatever the regulator is saying. For instance, in South Africa, an enforcement happened which has been very swift and decisive. South Africa Reserve Bank, through its Prudential Authority, fined Capitec Bank Limited 26.25 million rands, and additionally, additional 10.5 million conditional suspension for 36 months for violation of Financial Intelligence Act, following inspection that there were lapses in customer due diligence, beneficial ownership checks, and PEP screening. So you can see that the topic we are discussing today is very, very important, and we need to up our game in the sense that the regulation, the laws, the guidelines, they are not just there for the fun of it. They are here to help our business or also to help the society at large. Similarly, Absa Bank was also fined 10 million rands, and Central Bank also received 30 million rands penalty, both for ongoing due diligence failures and the transaction monitoring report. So it's not just one bank affair. So it cut across several banks in South Africa. So these penalties serve as strong reminders that gaps in customer screening and enhanced due diligence are not theoretical risks. They are costly business exposure that can cost us penalties that are also cost us, because aside you paying penalty, it is the issue that you also chance the risk of reputational damage, because banking is a business of trust. If you are found wanting by a regulator and a customer, hey, you are paying penalty on the other side, you might start losing business, and at the end of the day, before you know it, you might be out of business. Closer home in Nigeria, the regulatory environment is not. It's also very strong, and it's also coming up at a very alarming rate. So, in 2024, CBN imposed a fine of totaling 2 billion, 1 billion each on Moneypoint Microfinance Bank and OPay Digital Financial Services, following a fintech audit that uncovered deficiencies in their KYC, MX, CFT compliance, customer onboarding controls. So you can see Nigeria is also, while OPay publicly denied the fine, the case highlights the tightening scrutiny facing the Nigeria fintech and microfinance bank institutions in Nigeria. The same year, several major banks too, they were also fined multi-million-dollar penalty across various regulatory agencies, declaring that the enforcement in Nigeria is no longer hypothetical, it is happening in real time. And you can take it from me that what we are discussing is very, very paramount, and it's very important that we that are compliance professionals in our space, we should do what is expected of us. We should stay ahead of the regulation. So why does this matter to you? Whether you are a compliance officer, whether you're a risk person, whether you're a business person, whether you're a fintech founder, whether you're an executive, because behind each headline, there's a failure in process. something must have gone wrong that has led to us to this institution paying heavy penalty. So we need to look at it. So common root causes repeat across various banks that we have seen, whether in South Africa, whether in Nigeria, whether in any other bank globally. You see failure of customer due diligence, you failure of transaction monitoring, you see failure of not those entities not abiding by regulation. So it's cut across various startup of AML program that financial institution they are expected to imbibe as a regulated institution. So these gaps are where criminals and bad actors find opportunity and where regulators find grounds for action. So if there are gaps, of course, the criminal elements, they are going to exploit that gap. The financial criminal, they are not sleeping. We know with the advent of technology, a lot of things are coming up. So with that gives create a loophole that these guys can exploit. And once they exploit it, maybe fraud happens or your platform is used to carry out illicit activity. And what will happen next is that you're going to get penalized by the regulator, and there will be a lot of remedial action that you are supposed to carry out as a regulated entity. Well, enforcement also offers a roadmap. Every sanction takes a study of what to fix, tighten your KYC, make it meaningful for high risk profile, automate your transaction monitoring to reduce blind spot, and adopt your customer business practices that rely on mass complex ownership structure. So the among recent case study from financial intelligence globally demonstrate how strong financial analysis and information sharing identify complex laundering scheme and how weaker system allow them to persist. So that's very, very important because Egmont is the body that all the FIUs globally where they belong to. I think there are about 12 and so many countries that belong to Egmont globally. So they also share that opinion that look, is by you sharing information and having a strong transaction monitoring process, that's when you can you'll be able to highlight those risks that are that these bad actors they pretend to the financial services industry. So from a regional perspective, Kenya is also reinforcing its compliance posture. The Bank of Kenya recently strengthening its AML framework, imposing penalty of up to 20 million Kenyan on financial institution and 1 million individual for not complying with transaction 100,000 Kenyan shillings for day fine for continued violation. So we can see this is also Eastern Africa that this is so it's not just something in Nigeria or South Africa. Nigeria is in West Africa. East Africa, the same thing is also happening. So we need to know that the rule is changing. And it's not going to get better because with the advent of AI, machine learning, and all what we not have you, the cyber criminals are out there to outdo us. So we are as the practitioner of compliance, we are supposed to be ahead of them so that we are not seen as the wicked into the financial service space, so that illicit activity are not carried out through our platform. So what does a practical fix look like? First, compliance must be owned at the top level. So the tune and tone must be right. It's not just you have policy, you have procedure, do you have support of your board of directors? The tone and tune must be right. The tone is there, but the tune, they must always be singing that to say that, look, yes, apart from saying we have policy, we are ourselves, we are the board, they are owning compliance program from cradle to grave. So they are aware and they are giving us the necessary support to it. Second, controls need to be risk-based and providing not checkbox, not rule-based. We need to, because this age and time, the speed at which transactions are moving is very, very fast. And beyond it being fast, there are several transactions that are happening at the same time. Billions of transactions are being processed as we speak. In Nigeria, in the electronic banking space, trillions of transactions are being processed as we speak in amount. So it's not something that a woman can keep pace with. So we need to deploy technology, but in deploying it, we also need to know that the technology we are deploying is serving the purpose and is being fine-tuned regularly. So that important. So compliance technology and purpose-built AI because you reduce manual error, improve speed, and create audit trace. Yeah, that's very, very important because if we don't have the right solution, the right tool that will do this for us, we'll just be beating around the bush, which is why it's very important that you get the right tool, the right solution, the right AML software that can deal with this monster that we are talking about today. So this is where I think entities like pro compliance, they come into the conversation. Their experience in working with insurance company, banks, other fintech, shows that they are contributing a lot to robust identity and business verification, KYC, KYCB. So we have pro compliance will be able to help out in this regard because they are doing a lot in this space, and that will go a lot to way in ensuring that as an entity, if we subscribe to their solution, it's going to help in a way to mitigate many of these things that we are talking about today. So enforcement will keep intensifying, but enforcement is not only a threat, it's an opportunity to raise standard, to build trust, and to secure competitive advantage. Because, like I said earlier, if you are fined, the reputational issue, you have to also to carry out a just first step with fine. But they will keep on following up with you to be sure that you are doing what they say you do. There will be a follow-up audit to whatever sanctions have been meted out to you. So it won't stop there. So, but it's an opportunity for us to have that as a community, because when you are a compliant institution, it has its own advantage, and that will mean that some set of clientele, they are going to be attracted to you. So let's look at today's penalties should be tomorrow's catalyst for investment in people, process, and technology. That's very apt, because when you learn from your mistake, and that will make you to fall the into your tomorrow and say, okay, look, I made that mistake. I've realized it. That what am I doing to put appropriate process system and people things in place to be sure that I do not avoid the repeat of that kind of penalty. So let's move forward to the panelist case study and to practical discussion on how institutions across Nigeria, Kenya, the rest of Africa can learn from enforcement outcome and transform compliance from a cost into a strategic asset. So it's no brainer. So compliance is not just I think this age and time, compliance is no longer a cost item. It's also a revenue item. It's also a what do you call it? It's also a know your customer tool that you can use to cross-sell bring additional get additional benefit from customer into your space. Thank you all for listening.
Thank you so much for that very insightful keynote, Mr. Adeshoma. Please, let's give a round of applause, a virtual round of applause for Mr. Larry for that beautiful keynote. So now we'll be moving into our panel session where we'll take a deeper dive into the topic, one step ahead, avoiding the AML pitfalls that made headlines in Africa. And this is a session where our distinguished panelists will bring their wealth of experience from across the compliance, regulatory, and financial sectors, and they'll be sharing practical perspectives on what's driving AML challenges in Africa, and most importantly, how institutions can stay ahead through stronger systems, smarter technology, and a culture of compliance. Please join me in welcoming our very own Tosin Ozoya for this session. Tosin is an extraordinary operations and commercial leader with 15 years of proven excellence. Tosin has brilliantly led Probe's commercial operations, growing the organization from just 1 to nearly 70 subscribers in 18 months. She has also delivered high-impact projects across sectors funded by the Gates Foundation and USAID. So sorry, 1 second. Sorry, my network just blipped for a minute. So yeah, Tosin has also delivered high-impact projects across sectors funded by the Gates Foundation and USAID, and she has also expertly managed strategic collaborations with government agencies at local, state, and national levels. Her leadership, vision, and relentless drive makes her the perfect guide for today's session. So let's give a round of virtual applause for Tosin Ozoya as she leads the panel session. Tosin, over to you, please.
Thank you so much, Oyindamola. I think you've done brilliantly hosting so far, and I'm happy to take over as we dive into the panel session. Thanks for having me. I would like to thank all of our panelists who are here today for the time and your presence. Also want to thank Mr. Larry Adishimo for that insightful keynote to set the tone for the conversation we're going to be having today. So just to remind us, this is a topic, one step ahead, avoiding the AML pitfalls that have made headlines in Africa. And we have a brilliant team of panelists to help dissect this conversation. And the panelist scope covers the whole of Africa, I would say, and the conversation is all about Africa. In prior sessions that we have had, panel discussions focused largely on Nigeria, but we wanted to broaden the horizon and broaden the conversation because it's difficult to speak about the financial services sector in the context of just one country in today's world. Transactions are flying across borders, and the conversation should do the same as well. So without further ado, I will be going ahead to introduce our panelists in no particular order. I have Omololu Akinjide Adewalure, who is a visionary financial services executive with over 15 years of leadership in banking, credit risk, and operations. As CEO of Rex Microfinance Bank, he has driven remarkable growth, expanding assets to 2.5 billion and capital to 500 million. A distinguished alumnus of FUTA and Digital Frontiers Institute, he is celebrated for his innovative and transformative leadership in finance. Please give a warm round of applause as we welcome one of our key panelists today, Omololu Adewalure. Thank you so much for being here, sir. It's an honor to have you. And next I'll be speaking on my colleague and friend, Ranjita Walia, who's a purpose-driven financial leader, bringing a vital East African perspective to the conversation. I want to highlight that. She's going to be bringing that perspective to the conversation today on financial excellence and impact. With over 15 years of experience across corporate and social sectors, she has strengthened financial governance, implemented ERP systems, and delivered insightful board-ready reporting, blending executive and consulting expertise. Ranjita champions accountability, clarity, and strategic insight, helping NGOs, foundations, and enterprises across the region achieve sustainable and measurable growth. Please give a warm round of applause to Ranjita. Thank you so much, Ranjita, for being here today. It's a pleasure and honor to have you. All right, moving on to the next panelist, to the wonderful Veronica Murakinyo, who is a distinguished legal and compliance specialist with deep expertise in AML, CFT, data protection, CBN regulatory compliance, and capital market operations. She serves as the Central Compliance Manager and Senior Legal and Compliance Secretariat Manager at Capital Sage Holdings, overseeing compliance across multiple countries, a SEC-sponsored professional and certified member of the Compliance Institute of Nigeria. Veronica has led major regulatory audits, AML CFT trainings, and governance programs, bringing rigorous legal insight and strategic compliance leadership to every initiative. So let's give a warm welcome to Veronica Murakinyo. Thank you, thank you. I need to see it look warmer, more applauses and more emojis. Thank you so much. Now let's move ahead. And next we have our very own CEO of Pro Compliance, Akinola Majoye, with over 15 years of experience in major financial institutions, including Clearbank, Citi, HSBC, and Metro Bank. Akinola is a seasoned compliance professional dedicated to safeguarding the financial system. He holds advanced credentials in AML and financial intelligence, backed by degrees from the University of Leicester and Babcock University. Renowned for his leadership, strategic insight, and mentorship, Akinola stands as a trusted guardian of financial integrity. Please give a rousing welcome to Akinola Majoye.
Thank you, everyone.
Thank you, thank you. Next, we have Chidebere Josephat, who's a seasoned AML and financial crime compliance expert with extensive experience in transaction monitoring, sanction screening, EDD, and risk-based onboarding. He currently serves as a senior associate in AML onboarding operations at MoneyPoint, where he drives regulatory excellence and tech-driven compliance. He's a respected trainer and thought leader. He shares insights on AML, risk management, and regulatory innovation. Please give a warm welcome to Chidebere Josephat. And if you're in the compliance space and on LinkedIn, then you definitely know him. I see all of his insightful articles on all of the topics that have come by recently, especially with the FATF pre and post grey listing. Thank you so much for being here, Chidebere. Okay, next, yes, I'll be introducing this person just very briefly. She was supposed to be here. This is Madam Lucy Ogechichima. She's a respected legal and governmental affairs expert with over 20 years of distinguished service in public governance and anti-corruption at the ICPC. Unfortunately, she couldn't be here at this time, and she has asked her colleague, who I would be introducing in more detail, Kabiru Yahya Megari, to stand in, and I really appreciate your availability, sir, at today's meeting. So Mr. Kabiru Yahya Megari is okay. Someone has their hand up. Do you want to say something, or was that okay? I'll go ahead. Mr. Kabiru Yahya Megari is a seasoned anti-corruption and financial crime investigator with over 2 decades of experience in governance, compliance, and fraud prevention. As a chief of superintendent of investigation at the Independent Corrupt Practices and Other Related Offences Commission, ICPC, he has led numerous high-profile corruption and money laundering investigations and serves as a key liaison with the NFIU. Holding a PhD in business administration from Nasarawa State University, Dr. Megari brings a wealth of expertise in AML CFT strategy, intelligence analysis, and institutional collaboration, advancing Nigerians' efforts in transparency and financial integrity. Please give a warm and rousing welcome to Mr. Kabiru Yahya Megari. Thank you so much, sir, for being here. It's a pleasure to have you.
Thank you.
All right. As you have seen, we have a wonderful panel today to discuss today's important conversation, and I'm encouraging you to follow us on our social media platforms, YouTube, where this video will be shared. If you're on LinkedIn, we're there at Pro Compliance, on Instagram, Twitter, all of the socials. Find us there and follow us to stay abreast of our programs, our products and services, and the innovative solutions that we're bringing to the market. Yeah, so we'll be going ahead into the conversation, Papa. I hope you're all ready. Pay close attention, because I always learn at these sessions, and I'm hoping that members of the audience get to learn and draw from the experience of the wonderful panel that we have here. So diving right into it, the first question is directed to our wonderful Veronica Murakinyo. Looking at the recent enforcement actions in Africa, what common operational failures do you see directly led to sanctions? Which of these are primarily people or process failures, and which are technology failures? Over to you.
Okay, thank you, Luatosin. Well done. It's been a thrill. Thank you for having me on here. So let's dive in straight to the question. So the most common operational failures include weak customer due diligence, followed by incomplete beneficial ownership verification and failure to apply enhanced due diligence for high-risk clients such as PEPs and their affiliated persons and state-owned enterprises. Many stem from people and process gaps. For people, we have insufficient training, unclear escalation matrix, or my favorite, weak governance. Others are technological. I know companies that are currently still operating manually. So we have outdated systems, fragmented data, or manual screening processes. So I know for sure, because my company is one of the beneficiaries of the Probe tool. Probe tool helps address both through automated KYC and KYB solutions that improve screening accuracy, streamline workflows, and embed consistency across compliance operations. I hope my answer has sufficiently answered the question.
Yes. Thank you so much.
Okay.
So much. That was really brilliant. And I like how you just, started with the customer due diligence failures and how sometimes I think what I've seen in the sector is people taking this thing for granted. You think
Yes.
that you can judge a book by the cover. Someone walks in and you think, oh, this old lady can't be laundering money. Let's not bother
Yes.
with verifying her NIN in the case of Nigeria or the equivalent in another country. And then that's the person who happens to be the grandma of the scammer or the fraudster
Yes.
or the person financing terrorism and who's innocently doing this thing. And so that's why it's really important that beyond even verifying at the point of entry, there's a process to continue to monitor,
Yes.
and so it's really great. I like that you've highlighted that entry point function and how there's a mix between people failures where someone is just lax, and where also there are process failures or technology failures. Some people do not see the point of the technology. It's too expensive. Why don't you just check this or do that? They want to cut corners and find other ways. And many times it leads to very costly pitfalls that have made headlines, some of which we know, some of which were mentioned by the keynote speaker. So thank you so much.
Exactly.
That was really brilliant and to the point. So moving on to the next. Thank you so much. Next. So this is for Kabiru Yaya Megari. Sir, how has regulator focus changed in the last 24 months? And we can speak, I know that your jurisdiction is Nigeria, but happy to hear you speak about other jurisdictions where you're well informed. Where are institutions being judged more strictly today than before? And maybe tell us why as well. Over to you, sir.
All right. Thank you for having me. Good morning, everyone. I'm glad to join you this morning. My name is Kabiru Yahya Megari. I am Chief Superintendent Investigation with the ICPC, Independent Corrupt Practices and Other Related Offenses Commission. I want to begin by saying that the core regulatory shift in financial regulatory focus over the last 24 months in Nigeria, Kenya, and South Africa is the move from technical compliance, that's box ticking, and from box ticking, technical compliance, to effectiveness compliance, which is a demonstrable outcomes. So the big change is that regulatory compliance is now judged by its impacts, whether the system is actually stopping money laundering, terrorism financing, or proliferation financing, not just its paperwork. So this shift is driven by FATF mandate, which is the FATF standards, the 40 recommendations. As you are aware, we have the technical compliance and the effectiveness compliance, which is the 11 immediate outcomes. So these FATF recommendations give mandate to public and private sectors, and define roles each sector should play. For example, recommendation 26 requires countries to ensure that financial institutions are subject to adequate regulation and supervision. Recommendation 27 requires supervisors should have adequate powers to supervise or monitor. This is for public sector. While the private sector is driven by recommendations such as recommendation 9, 10, 11, up to 21. For example, recommendation 9 talks about countries should have financial institution secrecy laws that will not inhibit implementation of the Financial Action Task Force recommendations. Likewise, recommendation 10 requires customer due diligence. Up to recommendation 21. So this is the shift where the institutions are being judged more strictly today than before. I would like to say, areas like financial integrity and transparency, beneficial ownership, sanction screening, third-party risk management, and so on and so forth. I hope this answers your question.
Thank you so very much. Please give a round of applause, everyone. I absolutely love your response, and it makes perfect sense. And that logic is not only applicable in the AML CFT space, but I think across the board, moving away from saying I've ticked these 10 boxes and therefore I've done my AML CFT compliance, to looking at outcomes and saying, if you did the right thing, why are there 20 of such transactions in your organization? How did you miss this or that? So where the KPIs are shifting from inputs to sort of output focused, and it's amazing. I think it's brilliant. I think it's the way to go, absolutely. And I think it will keep everyone on their toes to say, look, it's not enough to have a list of SOPs and boxes to tick, but then it's to keep an eye on what's actually happening and have a dynamic approach to AML where you're constantly reviewing those checklists and those boxes. It's absolutely important to have the boxes and to tick them, absolutely. But we're saying, going beyond that, let's look at the outcomes. Let's set up some KPIs in our institutions that help us determine how well we're really doing from an outcomes perspective. So thank you so much for sharing that, in addition to all of the specific details on alignment with FATF regulation. So thank you so much. That's really brilliant. Really, really brilliant. So we're going to move on. Thank you so much. Yeah, so we're going to move on to the next. I've said it before, if you've just joined, I always have a great time on this session because there's so much learning. And I hope that everyone that's listening as well is learning too and taking away the learnings, because it's really important. It's not about spending time on a webinar, but taking the learnings back with you to your institution. So let's move on to the next. All right, so this is for Chidebere Josephat. How can automated KYC/KYB combined with AI-assisted PEP and sanction screening materially reduce both onboarding friction and regulatory risk? Can you share evidence such as a reduction in onboarding time or decrease in missed PEP hits from your experience? Over to you.
Okay, thank you so much for having me here today. So from an operational perspective, automation reduces onboarding friction. It enables legitimate customers to be onboarded faster while still maintaining robust compliance. And we know more customer, faster onboarding relates to customer experience. So it improves customer experience. And recent case studies have shown that with automation, firms are now reducing onboarding time. And then it has increased customer acquisition rates. And this is good for business. With AI-driven solutions like Probe, financial institutions can move beyond manual verification to data-driven intelligence verification, where decisions about onboarding are traceable, explainable, and defensible to regulators. And this is because automation introduces a new depth of standard scalability and that depth. So it helps compliance teams to detect inconsistencies, that are very subtle and little, such as say mismatch addresses, beneficial ownership opacity, or little exposures that a manual review might miss. And this is because it's not like we want to miss it, but the workload. And if you remember, Kabiru Yahya said regulatory compliance is now judged by impact. It's no longer effort. So it's not an excuse that, oh, it's because you have so much customers, then you can't do it. No. And then from a regulatory perspective, automation strengthens compliance outcomes. There is consistency. So with automation in the onboarding process, compliance is no longer based on vibes. Every customer goes through a defined process, be it CDD or EDD, right? And the process is consistent, the process is auditable, there are evidence trails, and this has led to stronger surveillance for PERPs, adverse media sanctions, because the same logic is applied to all customers, irrespective of who they are. And this has led to institutions, reassessing their risk. And then whenever new information is out there, say an adverse media news, these solutions have a capability of ongoing monitoring that, updates the customer risk profile. And, so for an evidence, I think it has made it faster, it has made it smarter, and it has made it, pinpoint accuracy. Yep.
Thank you so much. I love every aspect of what you have shared with us, starting with the financial bit, because every time you have a conversation about making convincing an MD or a chief compliance officer to make that investment into compliance automation, you get all sorts of feedback. It's expensive. This thing is just costing us money. It's not saving anything, and that. I hope you have heard from Chidere, who is at MoneyPoint using technology to speed up AML automation. It is real. I have so many experiences, so many examples, lots of feedback from people telling me, oh, I used to carry out this operation in 2 weeks. For instance, things like beneficial owner checks that you can do now in a matter of seconds, and do even a deep dive into those beneficial owners for corporate entities. Run sanction screenings on them in a matter of seconds, one click. Now, beyond just running it, you can then even refer to that information in future. There are audit trails in these applications. And that's why when the CBN was drawing out standards, I love that I saw that. I was proud to be a Nigerian, seeing that level of detail in the AML standards by the CBN, because it's really specified exactly how the technology should work. And I understand why they couldn't leave it open-ended and say simply automate, but they're saying how you should automate, what the capabilities of that technology should be. And then I quickly sat down and put my own application probe beside it and said, okay, do we check that? Do we check this box? And I would say that I'm very happy to report to you that yes, we do meet those guidelines. So if you are on this call and are looking for a solution, go to the chat box and book a demo with us, and let's prove what I've claimed now in this session. Thank you so much for that response, Mr. Chidere. So now I'll be moving on to the next question. Just a second. All right. So this is for Akinola Majoyogwe, and this is speaking to Probe. I've already started for you, and then you take it from me. How can Probe's verification and monitoring capabilities be integrated into an institution's existing workflows with minimal disruption? And what outcomes should boards expect in the first 3 to 6 months post such integration?
Good morning, everyone. Thank you very much for the question. So it's a two-sided question, but essentially the very first one and the very simple answer is, with Probe Compliance, we have a very dedicated and well-built API integration system where there's a full script, so we can actually go into your systems and then connect very, very seamlessly. We've got a very dedicated team that would assist in doing that. Now, what are the benefits? When you have a system, for example, when you talk about ID and V and sanctions and the rest, Probe is one of the only systems that integrates the KYB, KYC requirements, again, from a Nigerian perspective. When you're looking at sanction screening, both globally and locally, OFAC, EU, UK, HMT, and local sanctions, it incorporates all of that into the system. So essentially, what you then get is a robust system that helps when you're doing the onboarding. All this screening can be done as part of the onboarding process, and you have a report. And most importantly, where a lot of organizations fall flat is in the ongoing due diligence. So once you have a customer, you don't stop screening that customer. You screen them continuously because the regulations change, the financial crime landscape changes, adverse media changes, and then you have that all continuous. So To answer the first question, we have a very robust and very dynamic API integration system for all our platforms of transaction monitoring, Probe Core, Probe Exchange, and in the future, actually, Probe will be launching what we call Probe Delta, which essentially helps organizations continuously screen their entire customer base for adverse media and sanctions, because there's one thing screening at onboarding, but you have to have an ongoing due diligence system as well. Usually with Probe, we can usually say the difference is almost instant. As Tosin mentioned, companies' house checks can be done in minutes. We do KYB checks like your NIN, BVN, TIN, passport, driver's license, address verification, sanctions. We guarantee that the results are produced in at least 30 seconds when you use the Probe platform. And obviously it's all web-based. It's hosted on AWS. So usually for our customers, who some of them are on this call, they can obviously testify to the difference in terms of the speed, the accuracy of the system. We actually monitor the performance of third parties as well. So when we integrate to other platforms, we can tell you what platforms are performing at what speed. We can tell you, for example, OFAC if there's a downtime. We can tell you OPSI if there's a downtime, and systems like that. So I hope that answers the question.
Yes, thank you so much. And you know, when he said a lot about the capabilities of the platform, you have an opportunity if you're here and seeking to upgrade your compliance technology, start to automate your compliance processes, go to the chat. There are links being put in there now. If you want to schedule a demo to see for yourself what has been said, that opportunity is there at no cost. So I'll encourage you to go click and schedule your demo sessions now so that you get an insight into what we're talking about here. Thank you so much for sharing that. And again, I'll reiterate that it goes without saying, it's almost like the magic of any new invention. I'll say maybe before cars came about and we were with horses and carriages, you can't, the difference is just amazing. And I'll encourage all of you, please, if you have not yet automated your compliance processes, your AML processes, your KYC processes, schedule a demo. If you have, and you cannot confidently say that your application meets with all of the baseline standards for your regulators, whether it's SEC or CBN or NICOM, then come have a look. Please go ahead and do that. And I promise you that it will be worth your while. So over to the next. Ranjita, this is for you. Nigeria has seen a rise in regulatory enforcement. And, you're bringing us the East African perspective. So we want to know, and Kenya has made progress in addressing technical deficiencies. What lessons from Kenya's reforms could be applied in Nigeria and vice versa to reduce institutional risk?
Wow, thank you for that question, Tosin, and hello, everyone. I think this is such a timely and insightful discussion. I think Kenya and Nigeria have applied different strategies to address, the compliance risks. Kenya's progress stems mainly from coordination and capacity building, including digitized compliance, while Nigeria's focused on mainly consistent enforcement. And to actually achieve a sustainable compliance culture, what would be advisable is combining these two, that is the strong supervision and proactive industry engagement. So if you're looking for someone who can help you do this, Probe actually supports both by providing tools that standardizes KYC and KYB processes, increasing transparency in ownership structures, and aligning institutions with FATF compliant procedures and across different jurisdictions. Thank you, Tosin, and I hope that answers your question.
Oh, absolutely, absolutely, absolutely. Yes, thank you so much. I think it's important, so it looks like Nigeria is playing more police and Kenya is playing more lecturer. And you're saying, let's combine the police and the lecturer and use that combined strategy to improve things. Absolutely perfect. Oyindamola, do you want to, you have your hand up, do you want to say something?
Oh no, please carry on.
All right. Yeah, so let's move to the next. All right, Mr. Omololu, this is for you. So for institutions seeking to act now, what are the 3 highest impact short-term interventions they should implement to reduce enforcement risk within 90 days? Oh, this is serious. Everybody hold on, get your pen or something, note down these very important things he's about to tell us.
All right, good morning, everyone, and it's a pleasure to be here. Thanks to Pro Compliance. And for me, if you're looking at a short-term intervention to reduce enforcement risk, what I will be talking about is to first strengthen your KYC processes and enhance due diligence controls by implementing an automated identity verification and standardization of risk scoring. So that when you do this across customer onboarding and periodic reviews, you have a balanced system. Earlier on, Chidebere mentioned that AI has solved a lot of onboarding processes because it's fast and it's reliable. So if we are all going that route to bring in customers within a short period of time, you need to automate your system because you have to eradicate the manual processes. Before now, you open an account 24, 48 hours, but now you get accounts open within 2 seconds. People have given you account numbers. So you have to strengthen your KYC so that you automate it and reduce manual subjectivity within your system. Secondly, you have to deploy KYB solutions to reveal ultimate beneficial owners of all these accounts that you're opening. Using corporate intelligence and registry linkage tools, businesses, banks, fintechs, insurance companies will be able to eliminate all this risk that comes up by not knowing the ultimate beneficial owner. You have layered ownership. You have an enterprise who has another parent company behind the scene. But when you have a deployed digital solution, you will be able to understand all those people. And then on the last scale, I would say tune and optimize your transaction monitoring systems. Your rules has to be tuned such that you reveal current monitoring thresholds. You also segment to align them with the institution's real transaction pattern. When you do this, customer behaviors will be established. You will eliminate a false positive and also increase a very investigative capacity for your businesses, meaning that you know what is going on real time online based on all those feedbacks you have been able to get from a tool that is digital. And I can tell you that I use Probe. I'm saying it out here that we use Probe, and it has helped us streamline some of our processes. And I can tell you that Probe solution can be deployed within a very short time that will help you get to the destination that you want to get to. Thank you.
Thank you so much. A big round of applause. And I really hope you were taking notes, like I said, because the time to act is now. Remember, we're talking about avoiding the AML pitfalls. And as he was speaking, I was remembering this Nigerian joke of pit is meant for those who dig pits. Please avoid the pitfalls, avoid the holes. If you have questions, please put them in the chat, and the Q&A will take them after. I can see some hands up and all that. Please put them, we'll address them later. So please take note. Automation is not a let's wait for the final draft to come out. I've heard that a lot. And some of you on this call are guilty. You said, we've not seen the deadline. They've not given us a date. Don't do that. Because when the deadline is out, what's going to happen? High demand. They're calling us. Then we'll tell you, oh, your own session is in 3 months. So do act before it becomes high pressure. Act before. And aside, I keep saying this thing, and I will remind everyone. There's on the one hand, there is the regulatory concern. I don't want to be fined. I don't want to be sanctioned. I don't want to lose my license. On the other hand, there's your business reputation. You don't want to be the next institution who very dark man is talking about for the Nigerian context, So please, please do the needful on time so that they don't have to come and talk about you on social media and how people haven't gotten their money and whatnot. I'm making it real. Honestly, I'm making it real and practical for you to understand that reputational damage sometimes is even worse than the regulatory one. The regulators will post your name once and people might miss it. But the moment it gets into social media and all the blogs want to trend about you, it becomes difficult. So please take action now, avoid those pitfalls, and stay ahead. All right, so now we're circling back to Veronica to give us some more of a legal perspective. Enforcement often points to governance failures. Enforcement often points to governance failures. What should boards be asking monthly to assure themselves? This is also something to write down. To assure themselves that AML controls are effective, but also proportionate to the business model. I think this is a very important question because sometimes some businesses have really tiny structures and they are trying to implement a solution that would be applicable in a much larger organization. Same as, and this happens even when we're having commercial conversations. There's a large organization. You want the package for a small organization doing 3 transactions a day. That's not applicable to you. That's not applicable to your context. So I'll hand over to our panelists to take this.
Okay. Thank you, Tosin. So in Africa, regulatory sanctions increasingly reflect systematic weaknesses, not isolated infractions. Typically combining governance, people, process, and in recent times, technology gaps. So supervisors are now more risk sensitive. We are focusing on effectiveness over documentation. Companies are now incorporating enforceable policies, and weak execution is being penalized, right? So enforcement trends shows that regulators expect real-time oversight. This is where the automated tool comes in. This provides accurate data. You must incorporate consistent KYC, KYB practices. For instance, on the job, I run checks quarterly. Like I don't miss it. I run checks quarterly. I document my decision-making process to guide the team. Then we adopted a technology-enabled monitoring tool. So there's a clear shift from TikTok compliance to demonstrable risk-based compliance, especially for digital financial services, payments, agency banking, and cross-border transactions. Tosin, I hope
Thank you
that
so
was
much.
helpful.
Yes, excellent, brilliant. I couldn't have responded any better. I hope that people are paying attention. Governance is key, not only in AML, but just across your business. Given that our focus is AML conversation, what are you looking at? What are you requesting? What are you asking for on a monthly basis that helps you stay on top of things, helps you ensure that you're keeping an eye on what you should be keeping an eye on and that you're not found wanting. Okay, so we're circling back to Akinola again with this question. In the enforcement cases that we've seen, many failures occurred because alerts were ignored or not investigated. Now, what process changes? Please, this is very important because before I go ahead with the question, I've heard people say that sometimes we get so many alerts, we don't know what to do with them. So I'm bringing it down to the audience. If you're a compliance person, you can relate to what I'm saying now. And you've ignored something. So what process changes can help teams to reduce false negatives and false positives? And also, how can automation fit into that change?
Really brilliant question. I think this is essential just from a point of experience. So in the previous bank I worked, for example, we were doing transaction monitoring on crypto-based transactions and looking at fiat currencies. The system that we used at the time generated over 500 alerts on a daily basis. And of the 500, 499 were false positives. So if you have systems that are just churning out false positives, it then gets the analysts in that mindset that it's a false positive, it's a false positive, false positive. What you need to do with systems is your constant tuning with a lot of intuitiveness, especially with artificial intelligence. So when you look at the transaction monitoring rule, for example, does it make sense? Is it right? Do you have overlapping rules? If the NFIU, for example, has a rule where you have a reporting threshold, are those thresholds monitored correctly? Are the rules effective? So before you take out a transaction monitoring rule and put it out to a customer, you have to have evidence of testing that rule and ensuring that the rule is fit for purpose. There's no point in having 20 rules and none of them flag. There's no point in having 20 rules and they overflag and there's too many false positives. Managing the effectiveness of these rules, how they flag, how they are monitored, and how they are ultimately closed from an audit perspective is very, very key. There are some systems that have this kind of lacks where someone can have an alert, they assign it to themselves. No one else can look at the alert. No one else can work the alert. The alert is way, way, way over the 30-day, 60-day SLA, things like that. So you have to have systems that help you flag these rules, monitor these rules. And if I know that, look, there's a clear audit trail, then I'm not just going to close it as a false positive or just put in random words and close. So building systems and managing rules as they flag, as they trigger, how they come true. Do they get email notifications? Is there a system-based management of those rules? Can other members of the team work those rules and work those alerts when the flag is essential?
All right, thank you so much. I think process is the big takeaway from that, from his submission. You have to have defined processes in place. I think one thing that sometimes the misconception people have about adopting technology is that you just stop there. Once we have this, then everything is fine. But beyond adopting, you have to first deeply understand the scope of the application. What can this application do? And at what point do we come outside of it to do other things? What can we document? What feedback can we provide to the providers of this application to further enhance it to help our work? That's like the most important thing I would say, especially for us as providers of the technology, is the feedback from you to say, okay, I've used it. Can you make it do this or that to further enhance the process I'm defining so that it's less and less manual? One of the things that Probe does is continue to take that feedback and modify. So the application is sometimes so difficult to document a demo process because in 2 weeks, the application has improved, it has changed in response to either a regulatory change or common customer feedback. So on to the next question. Thank you so much for that, Akinla. Next, okay, back to Chidebere. What are realistic expectations around tuning transaction monitoring SIPs? And Akin touched a little bit on that. And, this is critical because sometimes people assume that you just put your rules in there and rest forever. But the truth is you will need to have an ongoing process for modifying those rules and modifying till infinity. So what are the realistic expectations around tuning transaction monitoring systems for African payment flows, such as mobile money, agency banking, and cross-border remittances? How do we avoid being overwhelmed by alerts while not missing critical suspicious activity? Interesting. Love to hear from you.
Okay. Well, thank you again. So, first things first, the truth of the matter is our reality, our transaction reality is very different from that of the West. And the number one realistic expectation is that we need transaction monitoring rules or systems that reflect our reality. And say, for instance, simply having a rule that flags, transactions that are greater than 500,000 would give you about 1 million alerts per day, right? And then this will make the entire team have the mindset of false positive, like the other speaker said. So I think for what I would expect from, transaction monitoring solutions is that they should train their model on real African transaction data. And if you look at our payment space is very different. You have velocity and then small amounts. And these kind of transactions, when you now impute Western banking rules, it makes it almost always useless. It makes it very inefficient for transaction monitoring. So we need to embrace that our financial landscape is unique and then have solutions that are tailored towards that unique, transaction pattern. And then we will now be able to augment behavioral monitoring to better flag suspicious behavior. And the second realistic expectation would be the human AI collaboration. I know that for most compliance teams, the goal is to have a very low false positive ratio. And for solutions like Probe, I think when I first tested the demo, I could see that majority of the alerts were disqualified, right? As, oh, these are false positive. And then it gives you that room to focus on the 5% that, may lead to financial crimes or SCRs. And I think another expectation would be embracing the noise, but controlling it. Yes, false positives are usually so many, but we need to embrace it. If you overtune, it reduces what is flagged. And then when nothing is flagged at all, chances are that you would miss the real risky scenario, right? And then the last expectation from me would be that transaction monitoring systems must be tuned to detect the accumulation of risk, right? For a very long while, we've focused on threshold, we've focused on velocity, we've focused on, round tripping, minute to one, but we need to focus now on accumulation of risk. I think this would have helped the Ponzi scheme scenario, right? Which, we witnessed some months back. So we need models that are trained to detect accumulation of risk over time. This could span maybe say several months, right? And then flag this and then make it, and then have an AI generated summary, and then makes it very easy for analysts to, link these behaviors that, oh no, this is most certainly suspicious. Let's take a closer look. Yeah, so I think those are realistic expectations from me.
All right. Thank you so much. I think key takeaways from that would be, for instance, with the transaction monitoring, you talked about the types of rules and having a system in place where there's the ability to sort of create and modify the rules as needed versus working with standard threshold, the basic stuff that everyone can even manually detect with their eyes to some degree. So having that flexibility is important. Embracing the noise was a phrase that I took away from you, because truly, if you try to modify the system too much, you're cutting out, you're increasing your risk inadvertently, because you're saying, I don't want to have to see all these alerts. But and the sad thing is that with money laundering, terrorist financing, these people get creative. They know how their brother or friend was caught the last time, so they're going to try another way. And so you have to be comfortable with some volume. There's going to be volume, and I think the work for us as providers is continuing to find ways to use AI and ML to learn customer patterns, like you said. For instance, at Improve, we have ML. We can learn customer behavior with our transaction monitoring tool. So it goes beyond just looking at transactions now. We're building a profile that is dynamic and absolutely based on what the customer's history is over time. So the customer's risk rating will evolve based on the number of alerts that are associated with that customer versus, having a static classification that, may not be relevant. So if you're looking for a system, you want to ask these very specific questions. I'm speaking to compliance professionals listening here. These are the things you want to look out for as you're trying to make your decision. How dynamic is the rules engine? Are we able to learn customer behavior? In the absence of those, give me an Excel sheet. I will monitor the transaction for you, right? So you need those. you need more than that. It needs to be at a different level. So sometimes people say, oh, it's expensive. It's not easy to build. You know how much it costs to pay an ML engineer? It's not cheap, but the value that you get is so much worth it. So I'll encourage you to, like I said, if you want to learn about our systems, someone's going to throw a link again in the chat. Book a demo and let's show you how it works. Let's move to the next question. Thank you so much for that, Chidebere. Okay, back to Ranjita. How should institutions balance business growth, such as rapid onboarding and fintech partnerships? That's really important. Yeah, this fintech partnership is such a big thing now. And with heightened compliance scrutiny that comes with scale.
Thank you so much for that. Thank you, Tosin, for that question. I think compliance has to be embedded into the growth strategy. You cannot have one, you can't silo them. Like a compliance has to be a growth enabler, not a bottleneck. So what are the solutions that are available? So for instance, with Probe's modular API-based verification systems, fintechs and banks can onboard customers rapidly while maintaining full compliance with AML and KYC requirements. This enables fast compliance scaling while reducing regulatory exposure and ensuring that expansion strengthens rather than weakens the control environment. To conclude, I'd just like to say, as my distinguished colleagues have also said, a proactive and risk-based approach to compliance using technology is what's important, because this enables efficiency and cost effectiveness while ensuring that you're also considering the sector and size of the organization when applying solutions. It can't be a one-size-fits-all. And like Tosin said, you might think that the solution is expensive, but trust me, in the long run, you're actually saving costs for the organization. Thank you.
Thank you so much, Ranjita. I think I want to take the key words that you mentioned. Compliance should not be a bottleneck. It should be an enabler. And it becomes a bottleneck when it's manual. That's a matter of fact. And that's why many times in banks, I'm sure some of us may have had those experiences, even personally, sales and compliance are fighting because I want to hit my target. And compliance person said I should wait for 1 week for them to check who the beneficial owner is, and the legal report has not come back. That is so 2000 and late. If you're still doing that, no. You will not meet up. You will lose a lot of opportunities to onboard customers. So that's the financial angle. You will lose a lot of opportunities. The faster people who are adopting technology and are able to do these things in lightning speed are making more money. So if you want to look at it from that perspective, okay, it's expensive, but what is it costing me to remain unautomated or to use an inefficient system? Makes absolutely no financial sense to not make the investment. So please do that today. Do that today. It's in the interest of your business, in the interest of the lifetime of your business that you do that. Thank you so much, Ranjita. Okay, so we're back to you, Mr. Kabiru Yahya. Enforcement is one tool. Guidance and capacity building are others. And this kind of ties into what Ranjita was saying, Nigeria's perspective, Kenya's perspective. What support do regulators believe will most help institutions close the gap driven by enforcement findings? How can industry and regulators partner better?
Thank you very much once again. First of all, I would say collaboration. Collaboration between the public and private sectors, collaboration between the financial institutions and designated non-financial institutions and all other stakeholders. The fight against money laundering, terrorism financing requires a collaborative effort. It's not a one-man business or things like that. Then the second one is the joint training, data transparency initiatives, and partnerships to embed a proactive MSFT risk management culture. Then the third one, I would say joint risk assessment and typology studies. Crime keep on evolving over time. So when you put hands together, public sector, private sector, all the stakeholders come together, conduct risk assessment, share experiences, knowledge, and how to combat all these crimes. Then the last but not the least is to deploy digital solutions. Thank you very much.
Thank you so very much. That was really insightful, and I like the idea. I think the concept of joint training, although I'm not sure, if there's been any implementation of such, but I think that maybe something regulator-led would be very helpful, where both the regulators and the regulated are within the meaningful context, having sessions together, learning together, upgrading together. I also like the point you raised about the learning about the typologies and sort of figuring out how to evolve along with the, with the perpetrators of these financial crimes. Thank you so much. That was really, really, really insightful. And of course, you mentioned at the end, adoption of technology. Technology adoption does one thing for us. It provides uniformity. It allows for easy data gathering. When you think about the GoML platform that the FIUs across different countries are using, the idea is let's have the data in one kind of set that we can easily process and then give you feedback. The idea is to collect this data and be able to do something with it. And that only happens quickly if there's automation. So that's the idea. I like to make sure that we're driving the point of why we're doing these things. And it's not simply to make your job difficult as a compliance person or to disturb. It's really meaningful. There's purpose behind automation. There's purpose behind the regulation. It's for the greater good of our financial ecosystems that we adopt these. Thank you so much, sir. Oh, yeah, so we're back to Mr. Awololu Adewalure. Beyond short-term fixes, what longer-term investments or strategies make the biggest difference in preventing future enforcement action? So before you answer, this is to those, you may have experienced an enforcement action, and sometimes I've spoken with people and they called me and they said, hey, what is UNSCCL? Somebody is here asking me. So Mr. Lulu is going to explain what are those things that short-term, long-term will help you prevent future enforcement action. Over to you, sir.
All right, thank you very much for that question. For me, the real shift is that people need to embed compliance in strategic planning. For anything long-term, it's strategic for you to embed your compliance in that plan. And when you do this, part of the things that I will mention is that you modify your data architecture. When we say modifying your data architecture, it will help you to reduce your blind spots. It will help you to improve your alert quality. It will also ensure investigations are traceable fully. And when regulators come around, they can attest to the fact that your data has integrity. People also need to know that they need to shift from a rule-based monitoring to a risk-based behavioral approach. Everything is no longer about the rules. Yes, the rules have always been in place, but now we need to go to a risk-based and a behavioral analysis, whereby we analyze the network, we do peer group monitoring of behaviors and patterns, and also introduce machine learning. Yes, you mentioned something that is not cheap. I will tell you that technology is not cheap, but for you to have the peace of mind and be at par with regulators, you should be able to invest in your tech. And this will help you. But lastly, it comes to about ownership, that compliance is not just about the business. You need to transfer ownership of compliance to your staffs. So we need to invest in training of staff, capacity building. Business unit needs to understand the risk appetite. At the same time, frontline staff must know what to do to identify the red flag. So everything is about bringing up processes that will help you get to that place whereby you can say in the long run, you have really, really dealt with compliance issues. And I can tell you that Probe's platform will support this. They have a platform that will unify your customers' data, KYC, your KYB, and every other information you have about the customer, and put it in a single platform whereby you can have a holistic view in one place at a time, simplifying your processes. I hope that answers your question.
Thank you so much. There's a lot packed into that. I hope that you were all paying attention to all that he has shared. And I think that, short-term, long-term, I like the idea of the capacity building point. It's so critical because sometimes people adopt the tech and then they leave it there. And then for 3 months, sometimes we have to take on the burden as the provider of tech of training. So we run trainings as well as these webinars. In fact, that's sort of where the idea for the webinars came from. We saw capacity gaps. So the technology is there and nobody knows how to use it. And nobody in another department understands why you're using it, what you're using it for. Then that causes issues. So, it's a systemic thing beyond buying and paying, which is great. there has to be investment and intentional, like build, like you said, into your strategy, whatever direction you're going. Say, okay, how can we bring compliance into this? How are we ensuring that there is regulatory compliance? How can we automate it so that it's not a bottleneck, so that it's speedy? And yeah, so that was wonderful. Thank you so much for sharing that. And I hope that the audience is really drawing from this well of knowledge and these intelligent contributions from our panelists. And this brings us to the end of what has been such a wonderful and educative panel session. I want us to give a big round of applause to our wonderful, wonderful panelists. We appreciate you so much. The amount of you have to watch this again, I'm sure, to pay close attention to the little details here and there. I've learned a lot. I always do learn a lot when I moderate these sessions. There's a lot of learning, a lot to take away with you as you go back into your own institutions and think through your compliance infrastructure, especially in relation to AML, CFT, and CPF compliance. I also want to, so thank you so much, wonderful panelists. Please give your own selves a round of applause. Thank you. Really appreciate your time and your wisdom and your knowledge in this area. So that will be it for our panel session. Now we'll be moving on to the Q&A, because I know that members of the audience have been itching to ask a question or two. And how this is going to go is we're taking questions from the chat box. We had mentioned at the beginning that you use the Q&A space or the chat to drop your questions. We will not, unfortunately, not allow you to unmute your microphone, but we will read the questions and pass them on to the panelists to answer accordingly. So let's begin. Let's go straight into it. Q&A. Okay, so I'm going to just go in the order that I'm seeing questions here. If you haven't put your question in yet, please go to the top of the screen. You see Q&A. If you do not see that, then just go and put it in the chat. So I see a question here from Kal Sarat or Mumija. It is there. Let me expand before I read. So there is a common occurrence, especially in the northern part of Nigeria, where individuals use another person's details, such as BVN, NIN, face verification, and other credentials to get onboarded. These accounts often end up being used for fraudulent activities. How can organizations prevent or reduce this? I don't know if Chidebere, I don't know if you want to take this. I'm going to be, passing them on to our panelists as they come. Did you get that, Chidebere? It was about identity theft of NIN and BVN commonly taking place. Okay, Akinola has his hand up.
Yeah, but I can still say something.
All right, go ahead, please.
Okay, yeah, so that's why we talk about automation. For onboarding, I think there is what we call a liveness check, right? So if Mr. A has provided the BVN or the NIN for Mr. B, right, we need to verify that BVN, right, and then validate the details of that BVN or identity document with whoever is, doing that onboarding at that moment. So if you carry out that liveness check, right, the AI system, scans your face and then compares it with the face, with the image of the BVN or the NIN or whichever identity document. So if that document does not belong to you, it automatically flags that account and suspends the onboarding. So such a scenario would be curbed by, having a risk-led onboarding.
All right, thank you so much. That's a great answer to that. We're going to move on to the next one. Okay, this one is a cost-related question from John Ekimogu. How friendly is the cost of automation for MFB? I don't know, Akinola, do you want to speak to that?
Yes, I can speak to that. What we try to do at Probe is not really focus on cost, but focus on effectiveness. That's why you'd see that with the Pro platform, we don't go by just a traditional way of charging. If you use WorldCheck or the LexisNexis systems, you pay for an annual subscription. Once your subscription is done, that's the end. With Pro, we kind of do different tiers for different companies. So, for example, with MFBs, for example, there are different tiers, and we're aware of those tiers. So we wouldn't necessarily charge the same price for every single MFB. And also, we have very intuitive systems, wallet pricing, our wallet system, where it's almost like a pay-as-you-go system, where you use a certain amount and then you top up for certain tiers of customers. So when it comes to pricing, I don't think you would find a solution that's more flexible and that actually understands the tierage of customers. Yes, it's not always cheap, but we're able to find the right package and then bill accordingly. I hope that answers the question.
Thank you so much. I think the summary is that, I've said something about choosing a package that fits your model, that fits your current business size and model. And where our pricing is modular in that regard, where it's based on your numbers and all of that, to a large extent. We have pricing tiers based on your size. And so that's about it. But we've said also that compliance automation is not cheap, but it's absolutely worth it. And it's indirectly, if you can speed up especially at the onboarding stage, the KYC, KYB bit of it, if you can speed that up, you're speeding up revenue and growth. Okay, so looking out for other questions. If you have a question, please put it in the chat or in the Q&A and we'll take it. I'm not seeing any other. Are we done? Is that it? Because I only see that one from Kausarat and this other one. Any other questions from the audience? All right, it looks like there might not be, or should I just give a bit more time? Members of the audience, do you have anything you want to ask about? And I hope that Kausarat is satisfied with her response, and John Ekimogun as well. Like I said, if you want to know more about the pricing, please just go into, okay, Sally, you have your hand up.
Yes, there are more questions now.
Okay. Let's see. Okay, I have Moses Ayibiogu. Can we get the video recording and the slides? Yeah, so there's a form that's been sent into the chat. For those who are interested in getting videos or any material from this event, please fill that form so that we can send it to you. Next question is from Antonia Obadiego. I apologize if I don't pronounce your names correctly. Forgive me. What operational gaps or identity verification weaknesses are enabling customers to obtain more than one BVN across banks and fintechs? Who can take this now? I don't know. Mr. Kabir, I don't know. Okay, Mr. Olulu, do you want to take that?
Yeah, I was going to say something about that in terms of multiple BVNs, that is no longer happening. That has been eradicated. It used to be so in the past. And today, nobody has duplicated BVN. It's just one BVN. But however, it's connivance between the person doing the capturing and the person enrolling that I would say it is. So you might have to look at your staffing, those persons in charge of onboarding and enrollment for BVN, because they might be doing one or two other things that you're not privy to. Where probably in the areas of a right thumbprint, they put a left thumbprint just to confuse the system. But I can also tell you that within the BVN system, all those data are being weeded out. So people have to be very careful what they say about this duplicity of BVN.
Yeah, thank you so much for that. I think, as for me, I don't have this kind of exposure. So it's interesting to hear that, there are multiple BVNs and people are putting left thumb. People are creative, It's amazing. Left thumbprint in place of rights to beat the system. And then, regulators or agencies have to then think about ways to clear this out. It's also refreshing to hear that something has been done about it, because I have a question from Daniela asking about the same thing. Somebody has 10 BVNs. Wow. People are rather creative. I guess maybe when your BVN gets
So let me just add to it that when you notice such incidents, you had to flag that BVN and report it to NIBS,
Exactly.
so that those
Exactly.
BVN can be blacklisted and removed from the
Exactly.
system.
Yes, I think that's a really important one, because Pro provides you an updates on blacklisting or watchlisted BVNs. We're only able to do that if you report it to NIBS, because NIBS is our source of truth on this. So if you notice anything like that, flag, report appropriately, so that we have access to that data and can help protect you. That's the key thing. Please, rather than raise your hand up, please put your question in the chat, because we will not be allowing you to unmute your microphone. I see some hands up. Please do that. We would love to hear from you. So like I said, the other question was also on BVN. Yeah, so lots of the questions are around duplicity with BVN. Okay, I see there's a new one. Okay, same question on video recording. Like I mentioned, if you want the video, okay, someone's asking about this is Eshikena Adogame from Afemai MFB. How many microfinance banks have you engaged with? Tough to give you a number, but I think at least 50. It could be more than that, but if I were to just imagine out of the lot, a minimum of 50 are currently signed up on our platform. That is for Eshikena Adogame. Festus I is asking a follow-up question to the one on identity theft. Some threat actors currently use AI deepfake videos of the person whose identity is to be stolen. Interesting, to bypass liveness checks. There are also situations where genuine account holders who abandon their account end up selling them to threat actors, who in turn make use of them for fraud. Is there a solution to these? So use of deep fake videos to bypass liveness checks. Maybe Chidebe, I don't know if you want to talk about that, or anyone else on the panel. And then there's genuine account holders who are selling their accounts to threat actors. So
Yes. So this is where ongoing monitoring, comes in. The customer risk does not stop at onboarding. Yes, it's very possible that a good actor might open an account and then maybe feel bored or needs urgency care and decides to just sell it, right? So with AI solutions, you can constantly monitor for account activity. And then because you know what you expect from a particular customer, right? When that behavior deviates, you can notice. And then you have to constantly opt for KYC refresh. It is not just enough that you verify the identity of a customer last year and then you still have that identity on file and use it continuously. No, a lot can happen in 1 year. I can get married to a PEP and my risk profile changes, right? In a span of 6 months, someone may have an adverse media hit in, say, 1 week. So you need to constantly do ongoing monitoring and then recalibrate the risk profile. So with that, you'd be able to solve at least 95% of these issues.
Thank you so much. As I read the question, I'm like, the truth of the matter is that as technology evolves, the threats will evolve and the problems will evolve, and it will continue to pose a challenge to the providers of these solutions as the criminals are getting more creative to figure out what can be done on a case by case basis. And I really like the point you made about refresh. So if I use an AI deepfake video, I'm honestly curious to how they're doing that. Are they putting a tablet in front of the other tablet and then it's capturing it, or how is it? How are they bypassing with AI deepfake videos? I would like to meet them. It's very interesting. Yes, so I think I like the point you made about the refresh, because if you're not aware that this particular institution, since they use liveness check and they understand the risk, now ask you at a random time, okay, show me your face. Maybe you don't have the AI deepfake in that moment and your account can be put on hold. So I think as threats evolve, solutions will evolve as well. The key thing is have a solution in place, have some automation in place that aligns with regulatory requirements. Give feedback as you start to see the loopholes, and they will modify their systems to meet up with those loopholes. I'm going to pass it on to Akinola, who has his hand up for his contribution here. Akinola, you're muted.
Sorry, yes.
Yeah.
Sorry. Just a very, very quick one. Fantastic contribution by Chidibere. What we usually advise is that with financial crime, it would never stop. As sad as that sounds, there are people that work 24/7 to bypass systems. So even, for example, there's banks over in Europe that used to use voice recognition, and it was AI driven, AI led. It would know that your voice is unique and have a code. But there's people that can replicate other people's voices and do it actually better than the actual voice owner. So those don't actually work to this extent that they're supposed to work. What we usually advise is just screening your systems. So for example, on the Pro platform, you have things like address verification. To some extent, you have NIN, BVN, TIN. And the good thing with, I guess, the NIN system is that it brings up the details, including the actual image of the person that owns those details. So it's not just telling you that the details are valid, but you can see a face. And then when you cross-reference that against an address, against maybe a BVN number, against this, then you can easily find out the truth by just simple investigation. So we usually ask that you use multiple ways of verifying. If somebody is deep faking via an NIN, then you can ask for their passport, you can ask for a driver's license and cross. They're going to have to deep fake all those different documents. And then you do general adverse media and sanction screening. Adverse media and sanction screening will bring up things like Instagram profiles, the LinkedIn page. If there's general adverse media, if they posted anything online, the system is able to screen globally. So you can easily then pick out any inconsistencies. So we usually advise that, multiple layers of IDNV, multiple layers of screening would then help in actually mitigating some of this risk. Thank you.
Thank you so much, Akinola, for that contribution. Thank you so much, Festus. It's a brilliant question. Very important questions to ask about. The new solutions that we're bringing on board, the risks that they portend, and how we may apply more than one layer of authentication around verifying a person's identity and whatnot. So if you're relying solely on one thing, that's risky, and you may want to consider either using that thing several times or having a second layer of protection for your institution that ensures that you're dealing with the right person. But like I've said, even when we find another way for the liveness checks to beat the deep fakes, someone will come up with another thing. There will always come someone. You raised the point about somebody sold their account to another person to make use of it for fraud. There will always be something. There will always be something. But the important thing is information sharing, collaboration. Share if it's a BVN related thing, send it to NIBS. Regulators need to keep their ears and eyes open as well to think about channels through which they can collect this feedback. Providers of technology also should build feedback mechanisms to collect the information as it's coming. So when we hear, we say, okay, this is the new one, this is the new solution. That's what's going to happen. That's just what it is. Any other panelists want to contribute on this before we move on? All right, there's a new post. Okay, is it advisable for banks? This is from Abdul Rahman Abubakar. Is this advisable for banks to honor BVN correction requests where the customer is requesting total change of name and in some occasions change of date of birth that have more than 5 years difference? What are the risks embedded with such requests? Who wants to take this on the panel? Someone maybe directly dealing with issues of this sort? Any panelist or even our keynote speaker, you're welcome, sir, to take this. Is it advisable? I think I have an answer, but I would like the panelists to take this. Okay, Chidebere, go ahead.
Okay, yeah, so while I don't have, that kind of direct experience, from a financial crimes perspective, I think that's one of the activities that constitute suspicious activity. So I think that bank has a duty of reporting it. Yes, you collect the client's information and tell them, okay, we'll get back to you and stuff. And then you have to report such an activity, right? And then you get a response from the NFIU, because they would have, done their own checks and say, okay, is this request valid? Why is this, customer trying to change details, the entire name? If it's a lady, did they get married? If it's a guy, what's the basis? Does it make economic, financial sense to be, requesting for that? So, yeah.
Yeah, thank you so much. I think from my perspective, because I've been there, I've been a customer whose middle name is not on one document, but it's in here. And I've seen different approaches from different financial institutions to things like this. And so this question, I think, points to a governance and process thing within your organization. Your organization should have its own internal risk process that says, if someone presents an NIN and their middle name is absent, do this or do that. Some organizations will ask you to go and get an affidavit, for instance, or something else before we go ahead. Some organizations will say totally reject. Some organizations will say ask for affidavit, report it, and do X. So this points to the need for that internal governance structure at your organization that guides everyone, so that it's not a question of what you feel should be done, but a question of what the policy is at your organization. I'll hand over to Ranjita for her contribution.
Thank you, Tosin. I was just looking at the question and I'm wondering, okay, change of name makes sense. One can change their name, but change of date of birth, like, has anyone ever come across a situation like
they were born again? The day they got born again, they want to
that's highly suspicious.
So this falls into suspicious activity report. Go and file it and report it, please. Okay, absolutely. I would say very suspicious, but of course there's a way you interact with the customer where you're like, okay, thank you for that information, and we'll give you feedback while doing the needful. But I think all comes down to governance, internal process. What is the process for my, and if it doesn't exist, be the leader in your organization that says, hey, we need to review the documentation for this particular scenario, and have like an internal process for continuous and ongoing like checks on what are the things we've seen as we're working, what can we document to cater to this particular situation. Thank you so much, Adungraman. Lovely. I love all these questions. They help, help us dive deeper into the conversation. Okay, someone is asking, I think it is the Shikena again from Afemai. What can you do when the customer's phone number is hacked and he's using his or her account number to defraud people? What can you do when a customer's phone number is hacked and using, okay, and the person who has hacked it is using it to defraud people? Okay, Akin, please go ahead.
I'd like to take that one. I've had some experience working telephone banking, doing it a long time ago. There's something about personal responsibility. Okay, so if your phone has been hacked or stolen and somebody has somehow gone in and defrauded, the first responsibility is to the person that owns the phone. So if you're an individual and your phone's hacked and your banking apps are sort of linked to it, a lot of banking apps have biometrics that you have to use to log into their apps specifically. Either a passcode or fingerprint. But reporting that makes such a significant difference, because you can report it, the account can be frozen instantly. But if you wait 5-6 days and then the money has been moved, and then you now say, oh well, somebody hacked into my bank and did this, all these considerations are taken into place. When did you report it? How much was moved? How did they get into your app? Did they use a passcode? If you use the passcode that you should know, then that's not going to work. So banks that build these apps also think about these things. There's security in place before you get into these applications as to what you can do. Even when you're transferring funds, some will require a two-factor authentication, for example, to say, okay, I'm transferring this, go onto the app and confirm, and then go back to the vendor and then click that you've confirmed. These things help to reduce forth. I hope that helps.
All right. So I think the key point there was a personal responsibility, and then ensuring that the right persons or institutions are notified when such a thing has happened. Because that can be very uncomfortable when someone calls you regarding something you have no idea of. So this is really critical in the world that we're in today. It looks like we are out of questions. Anybody else with a question? Because I'm going to say maybe one or two more before we wrap up. Any other questions from the audience? Okay, it looks like we've come to the end of the Q&A segment. I want to thank every member of the audience who has asked the question. These were really engaging and important questions that you've asked. And I hope that you found the responses helpful as you go back into your spaces. I will also want to, thank the panelists for responding adequately to these questions. Thank you so much for your contributions. They've been really helpful and insightful. I will be handing over to my colleague to wrap up the session. Damola, our host. Thank you.
Thank you very much, Tosin, for guiding us through that beautiful panel session. And thank you again to all our panelists for taking the time to be here and taking the time to answer these questions in detail. Thank you to the audience as well who have, presented these questions. These were very, very, brilliant questions. I actually learned a lot today, and I hope you did as well. So we hope you found this session very insightful and very valuable. And the panel have given you practical ideas that you can take back into your organization. So here at Probe Compliance, as you know, we are committed to helping you stay compliant and avoiding all the pitfalls that we have discussed today. So whether it's transaction monitoring, PEP screening, overall risk management, we provide the tools and the solutions that help you make your compliance simpler and more effective. And if you'd like to learn about, how Probe can specifically support your organization, you can schedule a meeting with us, book a demo via the links that we've shared in the chat. There's a link to share the demo as well. Please, Joshua, don't forget to keep, sending the links to the chat. Our team will be happy to guide you through our solutions and answer any questions that you may have. And I think we also have a PEP check that we would like to make available to everybody. I think we can put the link to that in the chat as well. So basically it's to help you check your PEP database. And don't forget to stay connected to our social media. Follow at Probe Compliance on Twitter, LinkedIn, Instagram, and Facebook for updates, session recordings as well, the future events, and so forth. Thank you once again, everybody, for your time and your participation. We look forward to partnering with you in making compliance easier and more effective. Bye, everyone, and have a lovely weekend ahead.
Thank you very much, everyone.
Thank you so much. Thank you so much for being here.
Thank you, everyone.
Have a wonderful weekend.
Thank you, everyone.
Thank you very much.
Thank you, everyone.